Okay, hey guys, welcome to my second video. You asked me a lot about trade breakdowns, so I'm going to do that today. I'm going to explain you how I passed a 100k account phase 2 in just one afternoon. So I took 3 trades simultaneously and I'm going to show you how I did it. Even though my entries were not ideal, I will show you what my trades have, what do you need to trade, and how I did this day. Well, basically, what you need when you trade is a drawn liquidity, which in this case for me was this sell side previous week low. You see, we were on a Tuesday. This is this week's Tuesday, and this is last week's Friday. So this was our drawn liquidity. Was super clean for me, super clear, and we had also this low here that failed to take it. So this was a low resistance liquidity run for us. Okay. You see my entry. What do we have here? First of all, we had an SMT with euro, and I'm going to show you. So, regarding my stop loss placement, how can I put it in this high without fearing it will go higher because of the SMT? This is a turtle soup. You know, in euro it was a turtle soup, and I will show you later. So once a turtle soup is done, you don't need price to go above again. So basically, I was safe to go to a drawn liquidity without fearing being stopped out. Why I didn't, I mean, you were going to think this is in deep discount, so I should wait to sell in premium. But when you're that close to the drawn liquidity, it can happen that it goes directly to them, and then it may reverse. But for the meantime, I did not expect a reaction, and combined with the SMT and the turtle soup, I thought we were going to go down directly. Then I set power 3. Why does this matter? Because this is a new candle. It's a candle that opens at 5. This one was. So when you try to predict the next candle you want to trade, what you trade, it's called power 3. So power 3 means that if this is a candle, it opens here, it goes down, then it goes up, it goes down again, and it closes. So in this case, if you were bullish, you want to buy in this lower part. So basically, what I want to do in the next candle is, in this case, I entered before the new candle formed, but what you want, if you are bearish, is entry above the open of the candle, you know? So that is what power 3 is about, and it's an important concept that you need to know. And in this trade, it was applicable in this way, out selling above this candle. Let me show you in 1 hour. You see, this is the 5 a.m. candle, so here it didn't make a wick, but if you enter right here, it goes directly to our take profit, giving you a move of 25 pips. Yeah, so it was enough. Okay, you see, my trades are not difficult. I mean, it's all about having a drawn liquidity and applying what you're seeing in the chart. If you see this SMT happening with euro, when a candle is opening, you can expect price to keep going in the direction it's going. Look how the trend was. So there's no reason for a reversal here if the draw is still not met, you know? Let's watch now what happened in euro. It was quite similar. You will see the drawn liquidity is not that clear because I was using the one in GU. So I exited the euro trade when GU reached the doll, not before. Okay, you see? The draw in euro, it could have been here, but as the one in GBP, that was the one I was looking at, had already been taken, I decided not to wait until here, and I just closed simultaneously my trades. What do we have here? The turtle soup. You see? This is a turtle soup, and it was SMT with GU. Then same, the next candle open was at 5 and it melted directly to my take profit. Stop loss was safe enough up here because the turtle soup had been made already. Why I did not enter here? Because I always like to wait for a reaction. You don't know if this is going to happen and take you out. So you just wait for the reaction and then you enter the trade. So that's why I entered down here when the candle was already going down. I don't think it's complicated. It's all about having a drawn liquidity and applying that. if you combine what you see in all pairs, you can build a narrative and act accordingly. So if I show you now in USD CAD what happened this day, look, this is I think you recognize what this is, or you should recognize what this is. This is a market maker buy model. We had the turtle soup here. Okay, so same, the 5 a.m. candle in USD CAD. Here I entered a bit late because the candle opened here, so the ideal long was here. But I missed the long, I waited for this new candle to open, I entered around here, and I looked for a 2R or more than a 2R to pass that challenge. I mean, I closed all my operations just at the passing challenge rate. It was, I think I needed to do $5,000 and I did $5,001. So just enough to pass the challenge, and basically that. So you have a clear draw liquidity who's bearish on GU, and you have a clear draw on USD CAD, which is bullish. So you can combine them and be quite sure that your narrative is correct, you know? The ideal buys were obviously here, but you can manage to enter the move if the draw is still not reached. Basically this, I mean, you see my trades are turtle soup, SMTs, draw liquidity, and I don't really care much about the entries because you can use everything to enter. You can enter in the order block, you can enter in the OTE, you can enter in the breaker, you can enter everywhere. I mean, I don't think it's really important because people worry too much about where to enter, and I don't think it's important. The only thing that's important is knowing where price is going to go and knowing where to place your stop loss. I mean, if you enter up here, your stop loss needs to be down here still, and you will just have less ratio. But you could enter here. I mean, just it's less ratio. What you cannot do is to put your stop loss up here just because you want ratio. You need to know where the stop loss is safe and what your target is. But I mean, the way you enter, I don't think it's really important, in my opinion at least, because when you start looking for entry patterns, you become a pattern trader. What I was using before was to use inversion fair gaps here. Let me paint this. So I was using this inversion fair gap, and what I did here was sell here, without taking into account that we're in a market buy model and that the target and draw liquidity is up here. So basically this. Let me delete everything. Well. So let's now explain how I passed the challenge. This was in total a little bit more than 8R, and I was risking 0.5. So here in USD CAD I made $1,000. Then in euro I made 100, well, close to 2,000, and in GU same. I mean, it was a little bit more than 0.5 risk per every trade. It was something close to 0.7 on every trade. So I was risking quite big because probably if this had gone wrong, it would have gone wrong in all the pairs, you know, because they are GBP is correlated with euro and USD CAD is correlated with, I mean, uncorrelated or correlated -1 with these pairs too. So basically that's what I did. I explained a little bit of my trades. There's not much more secret to it. I mean, if you have a clear direction on the high time frame, you can trade whatever way you want. It was no secret that this 5 a.m. candle was going to probably take the previous week low. I mean, it was an obvious draw liquidity. So if you wait for obvious draw liquidities and you trade to them, combining what I told you, there are odds that you're going to be on the right direction of the market. And basically that. With this, I want to show you that it's easy to make a 5% if you know what you're doing. And it was not big risk. Yeah, if you combine them all, it was close to 2% risk. But you don't need to do that. You just can take 0.5 in euro and 0.5 in USD CAD, and if it goes well, it's already 3% or something like that. So it's more than enough for one day. And with the feeling you have missed the good sell, you just can join here what you're not going to do is sell here. But if you wait for this to happen, to do a turtle soup, to play with a power 3 of another candle, and then it goes down, the odds are that you're going to do right. What you cannot do is trade with FOMO and sell here, because market doesn't go directly in one direction without doing some retracement. So you just need to wait for a retracement, wait for turtle soup S&T, and then go down. And that would basically be the breakthrough of math trades. They don't have much secret. Yeah, basically that. I hope you find this insightful. And I mean, I just show you what happened a real day on my real trading life. I passed a challenge with this, only this. I didn't need anything else to pass the challenge, and you can do the same. So yeah, thanks for watching, and don't forget to leave a like, comment, subscribe, and yeah, thank you.